Joining us now, former Ford CEO Mark Fields, who is also a CNBC contributor. It's a good week to have you, Mark. What have you learned from some of these earnings results, especially the smaller player EVs that are disappointing?
Hi, Sarah. Well, when you look at the smaller EV players, I mean, let's use Lucid as an example. I think the script has flipped now, where in Lucid's case and in some of these other smaller manufacturers of EVs, it's gone from a production challenge to a demand challenge. If you look at Lucid, the product is really good. But at the end of the day, even though their revenues were up a significant amount versus last year because they were producing cars this quarter, it was still well off what the street was expecting. So those big revenue misses really kind of augur for issues around demand. They've had to put some incentives, what they call credit, on some of their vehicles. And their deliveries to production actually was quite low for the quarter. They only delivered about 55% of the vehicles that they produced. So I think overall it says, for the smaller players, how fast is the market going to grow? What's the demand for their vehicles at very high price levels? Because the market, for example, for Lucid at the $85,000 to $150,000 range, that's not a very big market. And you have some very established players like Mercedes and BMW launching products. So it's only going to get tougher.
So what happens to these companies? Do they get bought? What's your prediction?
Well, one thing's for sure, these companies are going to continue to need capital to grow their businesses. In the case of Lucid, I think they reported about $4.5 billion worth of cash on their balance sheet, which was down versus the previous quarter, and they had to raise equity in the fourth quarter. So I think what you're going to see is a lot of these companies are going to have to go back to the markets or to other investors to continue to get capital to grow their businesses. And in some cases, these businesses, will move along, but they're going to have to prove to investors in the street that they can get to sustained profitability. Some will succeed, but I think some will fail and have to be bought by maybe some of the larger players.
And, Mark, you and I have spoken in recent weeks about sticker shock to some degree as consumers begin to experiment or at least investigate EVs. It's not like pricing is going to be a more fertile environment for some of these players.
Yeah, I mean, when you think about it, a EV costs about 20 to 25% more than an internal combustion engine product. And an environment, particularly an economic environment where consumers, their budgets are stressed for the months. The key is for these manufacturers that are producing EVs is to come out with EVs that consumers can afford, and you can get that mass adoption. GM is coming out with a number of products this year in the $30,000 to $40,000 range. But for these smaller companies where they're in the very high pricing range, that is a difficult task as you're trying to grow the business and need CapEx to build facilities and continue to invest in your product.
So does it mean that Tesla is still the rabbit that everybody chases because of their cost advantage, because of the money they save on things like marketing and dealer networks?
Yeah, I think Tesla is still the benchmark here in the EV market. I think, one of their very smart moves that they made early on was to go for pretty much almost full vertical integration, where they can control, they're the master of their own destiny of costs. Literally, and a lot of the large amounts of value of the material that goes into their products. When you combine that with their brand, which is held in high regard, they're a first mover, they tend to get a price premium, they continue to be in the lead, and we'll see next week when they have their investor day how they're going to continue to move the business forward. But I think every automaker still benchmarks Tesla as the leader at this point.